Good day, Doctor. We are from Group 4. Now we will present for the Group Project 2.
My name is Sheng and my matrix number is 2x7206. According to HAYUS 2023, the term assembly of stock refers to the process of selecting and combining individual stock to form a portfolio. According to Markowitz 1952, this process aims to maximize return for a given risk level through diversification. Next, portfolio performance is defined as the evaluation of a portfolio's return compared to the benchmark. There are several measurements such as Sharpe ratio, Treynor ratio, and Jensen ratio. Evaluating portfolio performance is a visual process for investors to assess the effectiveness of their investment strategy. Furthermore, rebalancing a portfolio refers to the process where investors readjusting the weightage of assets to maintain the intent asset allocation. Rebalancing is critical for managing risks and maintain desired asset mix.
Good day, I'm JANICE LIEW. Now I will discuss the economic analysis. Firstly, GDP growth. Malaysia GDP is expected to increase by around 4.4% in 2024. The expansion is due to the strong local demand and steady rebound in overseas commerce. For global GDP growth, it is expected to be 2.6% in 2024, which is led by the resilience in the US and large emerging markets along the fiscal support in China. Secondly, income level. In Malaysia, despite the positive economic growth and incomes, there are still significant disparities between regions and sectors. For global, there is a significant disparity in income distribution globally, with the top 10% of the population earnings approximately 52% of the total earnings. Next, export and import. Malaysia export and import increase, which have a positive trade balance. Overall, global trade has been slowly improving, although there are still concerns about supply chain distributions and geopolitical tensions. In addition, for the inflation rate in Malaysia was 1.8% in April and stayed unchanged in May. For global, the headline inflation expected to fall to 5.8% in 2024. This is driven by the unwinding of supply-side pressure and restrictive monetary policies. Lastly, interest rate. The Central Bank of Malaysia maintained its overnight policy rate at 3%. This is to assist the economy and it is in line with the current assessment of inflation and growth expectations. For global situation, central banks around the world continue to maintain high policy rates to combat inflation, which have impacted economic activity. That's all from me. Thank you.
Good day, Doctor. My name is Elaine. My matrix number is 2F560. So now I'm continue to present the industry analysis. And firstly, for the banking industry, recently, traditional banks are expected to continue to thrive in Malaysia, although online banking has begun to gain attention as the current technological revolution. And although the deposit competition has diminished, it continues to be substantial. Besides, given the challenging operating environment and persistently elevated cost pressure, it is anticipated that profit outperformance in 2024 will be restricted and the capital buffers will remain resilient. For the plantation industry, the position of Malaysia plantation industry in the global market remains solid. The main task of this industry now is to enhance the use of technology to increase the production and income while reducing dependence on deforestation and foreign labor. In addition, weak export demand and high inventory level still need to pay attention to. Lastly, El Nino phenomena is expected to affect the productivity from the end of the second quarter of 2024. Next is the ICT industry. Currently, ICT industry in Malaysia is in a state of fragmentation. Malaysia government and private sector are currently underway with a nationwide digital transformation. Government start to concentrate on the improvement of Malaysia industry sectors and global supply chain network and increase its support for the technology sector in the 2024 budget. Hence, it is projected that ICT industry will have a compound annual growth rate of 29% and contribute 25.5% to Malaysia GDP in 2025. For the energy industry, Malaysia energy industry is moderately fragmented. Although readily available technology provides significant energy efficiency improvement, there is a limited demand in Malaysia. However, Malaysia is making substantial progress in the advance of its renewable energy industry and the promotion of sustainable investment. Hence, Malaysia intends to achieve a 29% renewable electricity supply by 2030. And next, for the construction industry, government and private institutions are working hard to promote the construction industry, especially under the government policy of urbanization project. Malaysia construction companies are also perform well and have the resources and capability to meet the work covering all the project. The government focus on infrastructure construction, sustainable building practice, and digital transformation will bring a strong upward trend to the construction industry. And the market size in 2024 is expected to reach USD 38.55 billion. For the REIT industry, increase of the domestic spending and recovery of the tourism sectors and rental reversion for specific industry REIT counterparts had caused REIT in a favorable position for growth. The implementation of 5 to 10% tax on high-value products, which take effect on May 2024, also brings some impact to REIT industry. Therefore, it is predicted that Malaysia REIT will have a solid 9.1% growth in earnings this year as the consistent occupancy, rental rates, and the additions of assets. Lastly, for the US semiconductor industry, the recovery of the global economy and the development of the technology contribute a strong growth trend to the semiconductor industry. For this industry, current average price to earning ratio is 67.6 times, and the earning grow by an average of 11% per year. However, there are obstacles which can affect the growth of the semiconductor industry, which is a shortage of the technological talent and the geopolitics.
Now in stock analysis, the first company is Malaysian banking berhad Maybank. Maybank rebounded strongly in 2023 with a net profit margin of 35.6% and an ROE of 10.4%, highlighting strong profitability. EPS improved to RM0.78, while the PE ratio dropped to 11.46, indicating the stock is relatively cheap and a good buying opportunity. The market-to-book ratio at 1.13 suggests moderate optimistic about future profitability. Looking ahead to 2024, Maybank's outlook is positive, driven by its M25 positive strategy and stable asset quality. The banking sector, stable capitalization, and Maybank's strong financial metrics such as improving net profit margin, ROE, and EPS point to strong earning growth and an attractive investment opportunity despite sector challenge. Now, moving on to IOI Corporation Berhad. IOI profitability faced a 22.22% decline in net profit margin and significant decrease in EPS and ROE to RM0.18 and 10% respectively in 2023. The PE ratio rose to 20.78, indicating higher investor confidence, while the market-to-book ratio dropped to 2.04, reflecting weakened investor confidence. Despite recent financial challenge, IOI Plantation divisions show positive 2024 prospect with higher plum fruit production and improved specialty fat and oil demand. Increased FFB production and a lower cost structure enhance operating profit, while strong government support for technology boosts future growth potential. Next is Datasonic Group Berhad. Datasonic financial performance has significantly improved with a 318.87% increase in net profit margin and a 623.33% increase in ROE from 2021 to 2023. EPS rose to RM0.03 and the PE ratio dropped from 300.6 to 15.68, showing normalized market expectation and increased investor confidence. The market-to-book ratio decreased to 3.3, indicating the stock value over the company book value. With its growth in key government program and the digital transformation, strong government support and a favorable investment environment, Datasonic is poised for growth. The improving profitability ratio and undervalued stock present a compelling buying opportunity for high future return. Turning to Tenaga Nasional Berhad (TNB), TNB net profit margin, EPS, and ROE have been declining, reaching 4.9%, RM0.48, and 4.7% in 2023. Despite this, the PE and market-to-book value ratio have increased to 21.01 and 0.97, suggesting growing investor confidence in future profitability. TNB financial performance is expected to recover in 2024 due to stabilizing coal price and improved receivable. TNB will maintain its monopoly in Malaysia's power sector and benefit from renewable energy transitions. Low volatility and upward trends in PE and market-to-book value ratios indicate growth potential, making TNB a valuable addition to our portfolio. Let's look to Gamuda Berhad. Gamuda net profit margin dropped from 18% to 10.2%, but ROE increased to 7.9%, and EPS grew by 204.35% over the past 3 years. The PE ratio rose to 14.21 and the market-to-book value ratio increased to 1.06, indicating investor confidence in future growth. Gamuda's recent contract formalization and expansion in construction projects, including the Penang LRT and Sydney's Western Metro, highlight its growth potential. Positive trend in EPS and ROE signals strong financial health, and ongoing infrastructure project in Malaysia ensure future growth, making Gamuda a strategic portfolio choice. Next, LTY Hospitality REIT indicates strong profitability with increasing net profit margin, EPS and ROE from 2021 to 2023. The PE ratio dropped to 11.47 in 2023, suggesting the REIT is undervalued, while the market-to-book value ratio remains stable at 0.56. YTL Hospitality REIT offers a high dividend yield of 7.2%, surpassing industry's average, making it attractive for income-seeking investors. Stable rental revenue from assets in Malaysia and Japan and growth prospects from hotels in Australia boosted its financial performance, providing strong fundamental and promising investment return. Lastly, Nvidia profitability peaked in 2022 but declined in 2023, with high PE and market-to-book value ratio reflecting strong investor confidence. Despite EPS decline, the company's valuation remains strong due to anticipated technology breakthrough. Nvidia is a leader in the AI and GPU markets, benefiting from booming AI spending and a dominant market position. Despite stressed valuations, strong financial health and a projected price target of USD 1,742.67 by 2027 with a 51.53% upside potential make Nvidia an appealing long-term investment with high growth potential.
Good day everyone. Today I will be presenting the results of our analysis on the initial portfolio, which covers the period from 2nd January 2024 to 24 June 2024. Our portfolio initially consists of 5 stocks: Malaysian Banking Berhad, IOI Corporation Berhad, Datasonic Group Berhad, Tenaga Nasional Berhad, and Gamuda Berhad. Here, we have the correlation matrix of our 5 chosen stocks along with the KLCI index. From the table, we can see that Datasonic Group Berhad and Gamuda Berhad have a weak positive correlation with the KLCI, both less than 0.4. IOI Corporation Berhad and Tenaga Nasional Berhad have moderate correlations of 0.43 and 0.49 respectively, while Malaysian Banking Berhad shows a strong correlation of 0.6 with the KLCI index, meaning it tends to move in line with the index. Moreover, we can see that the IOI Corporation Berhad and Gamuda Berhad have a slightly negative correlation, indicating that their stock's price tend to move in opposite direction. Next, let's discuss the capital asset pricing model, CAPM, and beta values of our initial portfolio. IOI Corporation Berhad has the highest beta of 1.2359, indicating high volatility, but it also shows the lowest and negative expected return. The negative return is due to several factors, including a sharp fall in crude palm oil price and geopolitical tensions affecting the economic outlook. While the other 4 companies have favorable CAPM values due to their lower volatility with beta values less than 1. Here, we analyze the initial portfolio expected performance and financial metrics. The portfolio is expected to yield a return of 9.12%, surpassing the risk-free rate of 3.2%. This results in a robust Sharpe ratio of 13.37, indicating strong risk-adjusted returns. Malaysian Banking Berhad dominates the portfolio with a 70.74% weight, achieving an 8.79% return, while Gamuda Berhad stands out with a 6.79% weight and a 22.36% return. Despite some volatility, the portfolio's variance is low at 0.002%. Reflecting manageable risk levels. The efficient frontier analysis positions our portfolio at a balance point, optimizing returns against risk. We have compared the expected return and actual returns of stocks in our initial portfolio against the KLCI return of negative 1.32%. Malaysian Banking Berhad, Datasonic Group Berhad, and Gamuda Berhad show positive expected returns, with Malaysian Banking Berhad exceeding expectation the most. Despite some discrepancies, IOI Corporation Berhad and Tenaga Nasional Berhad outperformed their expected returns. Datasonic Group Berhad, however, recorded a negative actual return. Overall, the portfolio demonstrates positive actual returns from key stocks, reflecting effective management of market conditions. The initial portfolio, initially valued at 500,000, experienced robust growth during this trading period, reaching more than 573,000, a 14.76% return. Malaysian banking Berhad led with a 13.44% return, generating more than 47,000 in profits, while Tenaga Nasional Berhad and Gamuda Berhad also performed strongly. The portfolio strategic allocation, heavily weighted in key stocks like Malaysian banking Berhad, effectively contribute to its overall success, highlighting strong gains and a well-executed investment strategy.
My name is Wong Ching. My metric number is 285595. I will continue to present the first rebalancing. For the first rebalancing, Malayan Banking, Datasonic, TMB, and Gamuda are still included in our portfolio. However, IOI Corporation is replaced by YTL Hospitality Rate. This is because IOI has recorded the lowest return in the initial portfolio. For the correlation, the portfolio has better diversification since all the correlation value is below zero point 0.5, except for the correlation between Malayan banking with KLCI index and Malayan banking with TMB. It has indicated that there is a weak positive correlation between the security. YTL hospitality rate has negative correlation with Malayan banking and TMB, which indicate that YTL has greater diversification due to the difference of asset class. For the CAPM and beta, TMB has the highest beta, which means its share price is more volatile than market, and this is mainly due to the growth of data center in Malaysia. However, TMB also showed the highest expected return at 11.0452%. For the other security, their beta are lower than 1, which means their share price are less volatile than market and less risky stock. Among these, YTL Hospitality REIT has the lowest beta and expected return. For asset allocation, Malayan Banking Berhad still maintain the largest weightage in our portfolio at 49.23% due to the lower standard deviation and stability of its performance, while next is TMB 30%, YTL Hospitality Rate 13.37%, Datasonic 5.21%, and the lowest weightage is allocated to Gamuda at 2.19% due to its high risk characteristic. Next is expected portfolio performance. The portfolio return increased significantly from 9.12% to 23.83% after replacing IOI Corporation with YTL Hospitality REIT in the portfolio. It may be said that this particular combination of security yield a greater return with a variance of 0.0022% and a standard deviation of 0.0046. Sharp ratio is 44.335, which means that this portfolio yield a higher investment return in comparison to the level of risk associated with it. Besides, the allocation of weightage to TMB has increased from 11.23% to 30%, which is because we expect a greater return from this company due to the implementation of National Energy Transition's roadmap. TMB also achieved the highest return of 61733.82 with the highest average annual return of 35.89%, while the Gamuda Berhad has the lowest return of 3810.11 ringgit. Next, for the efficient frontier, the interval range is set at 1%, which means that the expected return of the portfolio is within the range of plus or minus 1%. According to the figure, the optimal point is reached when the standard deviation is 0.0046 with a return of 23.83%. For the return comparison, the market return is 10.86%. TMB has the highest actual return even though it is below the expected return. However, this still can be considered as a good investment as its actual return is moving closer to the market return. Malayan Banking Berhad actual return is higher than the expected return, which indicate that this security is performing beyond our expected, which generate a positive outcome for us. However, the actual return of Datasonic, Gamuda, and YTL Hospitality Rate are underperformed in expected return. Among these, Gamuda recorded the lowest actual return in the portfolio. Thus, for the profit and loss, following the first rebalancing of portfolio, the value of the portfolio experienced a successful growth. Throughout this trading period, there has been a steady rise in the price of all security, resulting in an overall positive HPR. TMB recorded the highest profit with an HPR of 5.23%, while Datasonic recorded the lowest profit with an HPR of 1.04%. The portfolio achieved a return of 2.72%, generating a profit of 15,625.66 ringgit and resulting in a total value of 589,417.15 ringgit. That's all for me.
Hello, good day, Doctor. My name is Anjali with reference number 28484. Now I am going to present our analysis result for second rebalancing periods. So based on the result, we can say that the correlation between the different companies in portfolio are all maintained at the positive value, but their correlation value are all lower than 0.5, which means that there is a weak positive correlation between the companies. But only for the TMB and also NVIDIA Corporation shows a different answer. TMB has a strong positive correlation with the KLCI index, while NVIDIA Corporation shows a weak negative correlation with the KLCI index. This demonstrates that if the KLCI index increase, the stock price of the NVIDIA Corporation will move to the opposite side. In fact, the NVIDIA Corporation have a greater diversification than other security to the KLCI index. It is because NVIDIA Corporation as a US company are more reasonable to be affected by the SP 500 and not the KLCI index. So after that, based on the CAPM and the beta table, all the 5 securities have the beta value below than 1, which indicate that the stock price is less volatile than the market, while TMB has a highest beta value, which is 0.99, meaning that TMB will fluctuate with similar amplitudes as the market performs. As the only NVIDIA Corporation with a negative beta value, which is negative 0.46, it has a completely different response to the market fluctuation. So compared to other security in the portfolio, TMB maintained a largest expected return of 14.23%, while NVIDIA Corporation, which have the negative beta, has the lowest and negative expected return, which is negative 1.88%. And the reason is related to the capital flow to the different country capital market. Okay, the figure above illustrated the asset allocation for the second rebalancing. So based on the pie chart, we can clearly see that there is a big difference compared to the previous right of allocation. The Malayan banking Berhad has been sold out and replaced by the NVIDIA Corporation. This is because the Malayan banking Berhad having a lowest holding period return that we gain. After that, based on the consideration for the industry trend, correlation, and diversification strategy, we make the adjustment for the remaining stock of the portfolio. We also allocate 4.82% of the total capital to NVIDIA Corporation to explore the return from the expansion technology industry and the potential return from the US stock market, and as one of the diversification strategies. Here also show the performance of the portfolio after the second rebalancing. So the total expected portfolio return is to be 35.49%, which is much higher than the expectation for the first rebalancing portfolio. This can be said that this is a securities given a higher return followed by a slightly higher variance of 0.0052% and a standard deviation of 0.71199%. Then the Sharpe ratio, which recorded a value of 44.8564. This indicates that this portfolio generates a greater investment return relative to the slightly higher risk taken on it. While based on the efficient frontier graph, the company stock we choose are the set of the optimal portfolio that offer the maximum expected return for a given level of risk. Since the interval was at 3%, the expected return for the portfolio is expected to fall within this range, which is plus or minus the 3%. The graph showed that for a return of 35.49%, the ideal point was a standard deviation of 0.0072. This has shown that for a given lower risk of level, the optimal position offer the best return. And we also make a comparison between the expected return, actual return, and also the KLCI return. So the KLCI market return is 14.37% during the trading period. TMB has the highest actual return of 31.6%, and it is higher than the expected return and the market return, which indicate that the TMB significantly outperformed. Besides that, the actual return of 4.98% NVIDIA Corporation is also higher than its expected return, which is negative 1.88%, which means that this security is performing beyond our expectation. On the other hand, YTL, Gamuda, Datasonic are underperformed compared to expected return. YTL possibility rate are having the lowest actual return of 0.75% among these securities. In short, we will consider lowering the weightage of this security that have the lower expectation. So for the profit and loss for the portfolio in second rebalancing, the value of the portfolio experienced a successful increase from 589,417 ringgit 15 cent to 620,203 ringgit 52 cent. Throughout this period, the price of all the securities have experienced an increase, resulting in a positive holding period returns. However, the share price of YTL has been rate have shown a decrease, leading to a negative HPR. TMB recorded a highest profit of 19,968 ringgit 54 cents, contributing a solid HPR of 5.7% to the portfolio. Unfortunately, the YTL hospitality rate suffered a loss of 143 ringgit 76 cents, resulting in a negative HPR of negative 0.81%. Thus, the portfolio generated a return of 5.22% and a total profit of 30,786 ringgit 37 cents, bringing the total value to 620,203.52 cents.
Now I'll present the tracking and error part. The tracking error analysis of the portfolio shows an initial low deviation of 0.4831% from the benchmark at the formations, which further improved to 0.3488% after the first rebalance, indicating enhanced alignment. However, the second rebalance saw a significant increase in tracking error to 1.62385%, suggesting a substantial deviation likely due to the market volatility or changes in the portfolio compositions, highlighting a need for further review of the rebalancing strategy. That's all from me. Thank you.
In conclusion, the value of our portfolio had increased to 620,203 ringgit and 55 cents, which is 14.76% of return. TNB contribute the highest profit, which is 5.7%, and YTL Hospitality REIT incurring a minor loss, which is negative 0.81%. By periodically adjust the portfolio, we aim to achieve a balance between risk and return. In this assignment, we can learn that the importance of continuous monitoring and strategy adjustment in portfolio management to achieve long-term financial goal. That's all for our group. Thank you.